Good morning, ladies and gentlemen. You're with Alex, Senior Account Executive at GDMFX. This is today's European Session Outlook, and we'll start with the North American markets. The U.S. economy contracted by a revised 0.2% in the first quarter, a smaller decline than previously reported that mainly reflects higher consumer spending and a lower drop in exports. Market reaction to data was mostly muted. U.S. stocks ended lower on Wednesday after two consecutive sessions of gains, as Greece and its creditors made little progress in negotiating a debt deal which would avert a default. The Dow Jones ended 17 points down and the Nasdaq 20 points down. The Dixie is up to 95.22. Today, we'll be expecting the initial and continuing jobless claims, personal income month-on-month, market PMI composite, and market services PMI. Onto the EU markets. Talks to keep Greece solvent stumbled with just days to go to reach a bailout deal as significant divisions over pension cuts and other conditions for aid prompted European finance chiefs to cut short negotiations Wednesday. Eurozone finance ministers called off a key meeting after a little over an hour, saying that Greek Prime Minister Alexis Tsipras first had to agree on budget cuts and policy overhauls with the three institutions overseeing the country's bailout. The euro strengthened Wednesday despite the reports, but equities did suffer a sell-off. The DAX 30 is 160 points down. The CAC 40 is 32 points down. We'll be anticipating Jordan's speech and the EU Extraordinary Economic Summit later today, which will gather all European financial ministers. Alright, now the UK markets. The mortgage lending increased for a fifth consecutive month this year, further boosting the housing market. A little above £10 billion were given out in mortgages in the month compared to 9.7 billion for the previous. The FTSE 100 had a 54 points movement and closed at 67.71. The 10-year gilt yields were at 2.132% yesterday. Tomorrow we'll be anticipating the Bank of England Governor Mark Carney speech, and the biggest mover was the GBP New Zealand dollar, 12 points down yesterday, 30 points range. On to the Asian markets. The Asian governments welcomed the US Senate's passage of legislation granting President Barack Obama fast-track trade negotiating authority, paving the way for the completion of a 12-nation Pacific Pact. It's a boost to Japanese economy, which is seeking to expand trade to breathe life into the world's third largest economy, and to Obama, who wants to counter China as part of the US rebalance toward Asia. In Australia, wind and solar developers in Australia can now get to work on more than $11 billion in projects after a new renewable energy target was passed. Overnight, we'll be expecting the imports and exports, trade balance year on year, running deficit till now, trade balance month on month, and all of that from New Zealand, from Japan, the job applicants ratio, national CPI ex food and energy year on year, overall household spending year on year, unemployment rate, and that's all from Japan. Last sector of the day is commodities. We had the crude oil stock exchange come out. The crude oil inventories fell by 4.9 billion barrels in the week ended June 19th. OPEC said its share of the global crude oil market last year declined to the lowest level since 2003, underscoring the motive for the group's current push to defend sales volumes. Gold fell to its lowest level in more than 2 weeks, extending losses from earlier this week amid a relatively flat dollar, stalled progress in Greek debt talks, and revised estimates of contractions in the US economy in the first quarter. Gold had a range of $11, trading at $11.77 now. Silver had a range of 14 cents at $15.94 now. Crude oil had almost $2 range at 60.16 now, and natural gas is trading at $2.74 at the moment with a range of 7 cents. Today we expect the natural gas storage change. The report is expected to show a build of approximately 80 billion British thermal units for the week ending June 19th. Thank you for the attention, everybody. This was our European session outlook. Until next time, goodbye.